And I now welcome on stage our first LP. So please welcome François Perrin, Head of ESG at GBL. So welcome, François.
Thank you.
Could you briefly introduce yourself, introduce GBL, and explain how you invest with a medium to long-term perspective?
Good morning. Good afternoon. I'm François.
Le micro plus proche de là.
Okay.
Yes.
I'm François Perrin. I'm heading ESG at GBL. I've been working on ESG and sustainability for the last 30 years, initially on the corporate side and 20 years on the investment side, initially in Europe and then in Asia and back to Europe these days. So at GBL, we are an investment holding company. We are listed. We manage a portfolio of 16 billion euro of asset, and we deploy our money in listed direct private and indirect private investments. One of the characteristics of GBL is to be owned and controlled by two families. So strictly speaking, we don't have clients. We manage proprietary capital, and the two families have been together for 70 years. So it's really give us the opportunity to have a truly medium to long-term view. When we invest, four things matters for us: the ability to be directly involved in strategic decision, being product, geographies, or financial decision, an impact on the management of the asset we own, and ESG.
Okay, so with this long-term outlook, probably the two families that you mentioned are completely aware of the major challenges of the polycrisis, in particular climate risk. How these families have shifted their investment strategy to address this challenge of climate change?
The first thing to realize when you address climate change is to make sure that your board of directors is on board. And we benefit from a very strong commitment of our board. The two families are controlling the board, so that's something for us that is a good start. They will be involved in a regular update on climate risk assessment, climate policies, objectives, etc. But I would like to step back. More than 10 years ago, in 2012, we went through a major shift in the way GBL was managed and operating. We had a change in leadership, and it's when we decided to also radically change the focus of our investments. We used to be the first shareholder in Total Energy. We used to be the first shareholder in NG. We used to be the first shareholder in Lafarge, and we were also in Imerys. So altogether, our portfolio was contributing for, at our level, roughly speaking, 35 million tons of CO2. We decided to exit energy. We decided to exit regulated businesses and to focus our investment on consumer-driven themes, sustainability themes, healthcare, and tech. And after more than 35 billion of asset rotation, we managed to cut our carbon footprint for our portfolio by a factor of 30. Today, it's 1.3 million. So it's really basically what was the key driver for us of first the climate risk recognition, and after that adjustment of the portfolio. But that's a story for the past. What is more important for us is how can we continue to progress on our journey. It's down to implementing our climate transition plan with objective for GBL and for our portfolio, either in terms of their own climate trajectory or really the focus of our investment.
So you invest much more than you used to be in private assets, both direct and indirect, so through funds. Let's focus a minute on funds. So you like, I think, to cultivate close, long-term relationship with GPs. Can you tell us how does it work? What can GPs expect from a client like GBL?
Our alternative investment platform manage, roughly speaking, 20% of our assets, and it's 3 billion. And we will focus for almost 2/3 in investment as LP, and the rest will be co-investment. So what we like to do is to really team up with GPs and be more than just another LP, to be able to bring capital when and where is needed. For that, we can also bring a very strong connection related to a GBL investment ecosystem. We'll be active in listed, we'll be active in private, we'll be active in a indirect private situation. We have a number of strategic innovation committees that we can leverage, I would say, in these different assets, and we do that on a regular basis. What we are looking for in terms of investment focus for our alternative investment platform is really what we cannot get access to as a direct listed or direct private equity investor. So attractive risk return, focus on Europe and North America, buyout, structured equity, secondaries, and we'll most likely avoid VC or growth or distressed situation. We are already loaded on that.
Thank you, François. Thank you for, and congratulations for this shift of the family office from, you listened to it, highly carbonated listed assets towards sustainable solution in private assets. So we can upload, I think, François. And yes.